Did you know that only 0.9% of viewers have subscribed to my channel, while 99.1% are still not subscribed? If you're enjoying the content, please support the channel by hitting the subscribe button and clicking the notification bell for the latest updates. Now, let's dive into today's news. Chinese investors have significantly reduced their home purchases in Australia, resulting in a major drop in offshore funding for Australian properties. According to the Foreign Investment Review Board, FIRB, funding from Chinese investors fell by $1.3 billion, contributing to a nearly $1 billion decrease in Chinese investment in the Australian housing market. This decline is putting pressure on Prime Minister Anthony Albanese, who is already facing intense scrutiny over the country's ongoing housing crisis. The Albanese government is aiming to build 1.2 million new homes over the next 5 years, but international investment, especially from China, has sharply declined in the past year. The FIRB's data reveals that overseas buyers spent $6.6 billion on Australian homes in the last financial year, down from $7.9 billion the previous year. Of this decline, $800 million can be attributed to a drop in Chinese investment. International investors approved by the FIRB are restricted from purchasing existing homes, meaning their contributions are primarily directed toward the construction of new properties. The federal government is currently working on a national housing accord to meet the ambitious target of constructing 1.2 million homes by mid-2029. However, the Housing Industry Association, HIA, has raised concerns, stating that Australia may fall short of its housing target, possibly constructing fewer than 1 million homes during this period. The National Housing Plan is a central part of the Albanese government strategy to tackle the country's housing and rental affordability crisis. HIA chief economist Tim Reardon noted that, in 2015, Australia built around 120,000 apartments before significant taxes and levies were imposed on international property purchases. He emphasized that to meet the target of building 240,000 homes annually, foreign investment would need to increase. Reardon argued that every dollar of foreign investment lost makes it less likely that the 1.2 million homes target will be met, stressing that no amount of public housing investment could compensate for the absence of foreign capital. Reardon also criticized the contradictory stance of governments that demand more housing while simultaneously discouraging foreign investment through higher taxes. Timothy Hibbert, head of property and building forecasting at Oxford Economics, acknowledged that while the loss of over $1 billion in foreign capital is unfortunate, the current level of international funding is so low that it is not central to their forecasts. However, Hibbert cautioned that reduced foreign investment could have broader implications for the Australian economy. Hibbert pointed out that the government would receive less tax revenue from foreign investors and highlighted that several Chinese developers had sold their Australian assets, leading to fewer developers operating in the country. He warned that while foreign funding played a crucial role in Australia's apartment building boom a decade ago, reviving such investment now could be difficult due to various factors, including domestic challenges in China, such as the collapse of major construction firms like Evergrande. Furthermore, Hibbert noted that no other country has filled the void left by Chinese investors, which has been detrimental to increasing housing supply. He estimated that the loss of nearly $1 billion in foreign capital could translate to around 1,000 fewer homes being built, underscoring the substantial funding required to meet the National Housing Accord's goals. Leanne Pilkington, president of the Real Estate Institute of Australia, REIA, expressed concern over the reduction in foreign capital, especially in light of the ongoing struggles in China's property sector. She stressed that the need for more foreign investment to boost Australia's housing supply and address the affordability crisis is critical. Pilkington also pointed out that the dramatic decline in international spending on commercial real estate, which fell from $50.2 billion to just $23.3 billion in the last financial year, was not surprising. The decline in commercial property transactions follows changes made on May 1 to streamline and strengthen the framework around foreign investment in Australia. The new regulations aim to boost the government's ability to impose conditions on investments, prohibit certain investments, or even unwind transactions if there are concerns about Australia's national interest. According to data from realestate.com.au, in June, residents from the UK and New Zealand showed the most interest in Australian properties, followed by the US, which surged to the top spot in July. However, searches from China have declined. Analyst Karen Dello noted that international searches for Australian homes increased by 3% over the past year, despite the reduction in Chinese inquiries. Separate figures from GUI.com, an online portal for international real estate, show that Melbourne attracted 30% more inquiries from China than Sydney in 2023. This was a sharp drop from the 177% increase recorded the year prior. Perth, Brisbane, and Adelaide followed as the next most attractive locations for foreign buyers. Daniel Ho, co-founder of JYECI, commented that many of the foreign buyers they encountered indicated they were looking for homes to live in, rather than investments. This suggests that foreign investors' interest in Australia is almost non-existent compared to its peaks between 2014 and 2018. Ho also explained that the reduction in international property purchases can be attributed to affordability issues. Some international banks are offering interest rates that are 2 percentage points higher than Australian lenders, and foreign buyers face additional taxes, fees, and duties that local residents do not. These factors make property purchases in Australia less attractive for foreign buyers. Finally, Ho added that the decline in foreign investment is even more pronounced in the long term. Over the past 3 years, the FIRB approved $8.4 billion in foreign investment, compared to $126.2 billion in the decade leading up to June 30, 2021. That's all for today's news update on the Australian housing market. If you found this video insightful, please make sure to subscribe to Aussie Pulse and hit the notification bell for more news. Thank you for your support.